Guys, this is S&P 500 weekly technical analysis for the week of October 31st, 2022. That is from October 31st Monday to November 4th Friday. In the last weekly technical analysis of the S&P 500, I told you that the companies are going to post their earnings. On Tuesday, Microsoft and Google, I mean Alphabet. Then on Wednesday, Meta. Then on Thursday, Apple and Amazon. And because these are the giants, we call them the giants. So when the giants post their earnings, the market means the S&P 500, the Dow Jones and the Nasdaq, everything becomes heavily volatile, heavily volatile. So this is where I told you that the volatility will be at its peak. The speculation will be at its peak. Anything can happen. You can see surprises. You can see uncertain movements. Things can go easily against the technicals. If you are thinking it is moving up, it can come down. If you are thinking it is coming down, it can move up. Means anything can happen because the giants are going to post their earnings. And the other thing that I mentioned in my last S&P 500 weekly technical analysis was that yes, on Monday we can predict, on Tuesday, okay, we can predict, but Wednesday, Thursday, Friday, or the Tuesday onwards itself, okay, this the second half of Tuesday onwards, then Tuesday, Wednesday, Thursday, Friday. This is something, okay, that cannot be predicted in the weekly technical analysis. And if you have subscribed to my channel and if you have watched my previous S&P 500 weekly technical analysis, then this is what I have mentioned for particularly for Monday and Tuesday. Anyways, because this is a very heavy bullish candle, reason we know. Number one thing that on Monday, that will be October 24th. On Monday, either we are going to see a gap up open. Okay, most likely we are going to see a gap up open. Okay, or number two, irrespective of the open, the S&P 500 and the entire stock market, the Dow Jones, the Nasdaq will move up. So now, what we knew that on Monday, see, the Monday was predictable because Monday there were no such earnings, means from these the giants. And once it moves up, then it will see the trend line. After hitting the trend line, it will come down. Now we need to see whether it is holding or it is coming down. If it is coming down, then this is it. Okay, and if it is able to hold, so if it is able to hold there, in that case it will see a bullish reversal. And once it see a bullish reversal, then we need to see whether there comes a bullish breakout or not. In this week, the entire week, it was the Dow Jones, that was pushing the entire market up, the S&P 500 and the Nasdaq and all other indices. Okay, not just the American indices but the global market. It was only and only the Dow Jones. So on Wednesday, this is what I mentioned to my YouTube community members, that the Dow Jones just hit its 61.8% Fibonacci retracement level. That was at 32135. And now looks like it is heading to its 200-day EMA. So this the hit at 200-day EMA, it may or may not happen, but because it has hit the 61.8% Fibonacci retracement level, this means that this is it. Again, guys, do not forget that, as I mentioned earlier, that we had to look into these cases day by day basis. Okay, we cannot predict anything. Okay, what is going to happen tomorrow? Now then came the most surprising part. This is the pure case of this, the manipulation. Okay, you will never ever see this thing. Again, guys, do not forget that the Dow was trading on the saturated technicals for last 2-3 days. Now, if you see that on Thursday, on 27th of October, there were 5 factors. There were 5 factors that were against any upward movement. So the 5 factors that I was talking about is: number one, if you look into the shape of the candle, it is a kind of bearish hammer and a bearish candle. Okay, bearish hammer, bearish candle. Okay, this means that again we are going to see bearish sentiments. Or secondly, this candle has formed at the top. So it is saying that a bearish reversal is going to continue. Means this was the top. Technically, again guys, technically. Okay, I'm not a manipulator and I do not manipulate the markets. Right. Other than that, this candle closed inside the Ichimoku cloud. Again, that was the second failure. Other than that, it failed to close above this, the 200-day moving average. That was this the next point. Okay. Other than that, it closed below 31. It closed below 32,135. That was a 61% Fibonacci retracement. One candle, two consecutive rejection. Other than that, there was this the these the saturated technical. Five factors means that no power in the world can help the entire stock market, the Dow Jones, the S&P 500 or the Nasdaq to move up, no matter what, except the manipulators, except the manipulated movement. Because when the manipulators comes into the picture, then technicals may not work as was expected. In that case, what will work? Okay, it will be what the manipulators they have planned and they have decided. So yesterday, if you have seen the pre-market, Apple was barely up by 1%, 0.8%, just 1%. Amazon was negative 16%. So it was clearly indicating that the things are not good. Other than that, yesterday the core PCE, the core PCE data. Okay, so the core PCE data that the Feds use. So when they make these the policies, okay, or when they decide this the rate hike, so the core PCE was more than the previous one. So this is clearly indicating that the inflation is going to move up, or the inflation is still moving up. This was again, so these the earnings were the sixth factor, core PCE was the seventh factor. Then came the eighth factor. Eighth factor was the pending home sales were down by 10%. The pending home sales were down by 10%, much more than worst, means it was the worst case. Okay, so these the 8 or the 9 factors were clearly saying that this upward movement is impossible. So through the data, through the news, through the technical, this was impossible to happen. But again, thanks to the manipulators, okay, they have planned something else and they moved the entire market up by more than 2.5%. So now from Monday onwards, okay, this the speculation will come down, the manipulation come. See, I'm not saying that the manipulation will not happen or the speculation it will not be there. Now guys, let's discuss the agenda of this S&P 500 weekly technical analysis. So the first point in our agenda is that I'm going to cover the S&P 500 technical analysis on the weekly chart, and I will tell you that what the trend is saying, okay, and what was the movement, and there, okay, we have seen this the very heavy bullish candle. So what will be the impact of that? So weekly chart means the hawk eye view. We are going to look into the picture that what is going to happen, okay, on this the broader scale, the trend, etc., everything. Okay. Then the next point in the agenda is the profit booking technique and possible scenarios in the S&P 500. Because there was a very heavy manipulated, purely manipulated movement in the S&P 500 in this the previous week. Okay, and not just in the S&P 500 but in the Dow Jones and the Nasdaq. This means that now everything is saturated. Okay, everything is like so now the market manipulators, okay, they are going to dump whatever they have bought, okay, and because they have moved up this the market, so possibly they are going to dump it all. Okay, so that will be there in the profit booking technique and the possible scenarios in the S&P 500. Okay, Monday and Tuesday. So then comes and then comes the third point of our agenda, that is S&P 500 support and resistance levels. So I will give you these support and resistance level, and I will give you that, and I will tell you that what will be this the possible, okay, this the range. And if you have noticed that last week I told you that we have the 3840, okay, 3840. So yes, there are chances, fair chances that the S&P 500 can hit 3840. Then we have 3884. Okay, when it breaches the 3840, then we have the chances at 3884, and that's it. However, we also have 3907 and we have 3935. Okay, 3935, the chances are extremely thin that the S&P 500 will be able to hit previous week. Extremely thin. Okay, but yes, 3907, there are some chances. Then comes the dollar index, bond yield, volatility, and the earnings. Yes, now we need to discuss the dollar index, bond yield, and volatility. So see what we know about the dollar index and the bond yield. When the dollar index moves up, when the bond yield moves up, okay, in that case what happens? In that case the stock market comes down, S&P 500 comes down, Dow Jones comes down, Nasdaq comes down, everything comes down. But yesterday, surprisingly, okay, again, why I'm saying that it was purely manipulated, because it has defied 8 factors, 5 technicals, 3 news, or the data. Okay, yeah. So what has happened is that yesterday the dollar index was bullish and the bond yield was also bullish. When the dollar index is moving up, bond yield, okay, it is moving up, then the stock market, S&P 500 and the Dow Jones Nasdaq must come down, and this is what happens under normal circumstances. Okay, so yesterday dollar index was up, bond yield was up, and surprisingly, this the stock market it was also up. Okay, this is some kind of combination. Okay, that doesn't fit, right? So we have dollar index. So I will discuss the dollar index, bond yield, volatility, and the earnings, and how the earnings okay of the giants played okay this kind of role, and what we are going to expect okay in the coming year or in the next quarter from these the giants. Then I will give you the S&P 500 technical analysis on the daily chart. Okay, I will tell you that how the S&P 500 is going to behave on the daily chart from Monday, Tuesday, Wednesday, Thursday, Friday. Okay, etc. Okay, guys, there is one more thing that if you have not yet subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want these updates, the daily analysis of the S&P 500, in that case, you can join my YouTube community. I have given the link in the description and also in the comment section. Now guys, then okay, finally I will discuss the probable movement of the S&P 500 from October 31st to November 4th. That what is going to happen in the S&P 500, because see, so what I mentioned is that last week was extremely volatile, and we knew that the things can go against each and everything. Market will be heavily speculative, heavily manipulative. Okay, anything can happen. This was something that we knew already in advance 1 week ago. Okay, now from this the coming week, Monday onwards, the volatility okay it will come down slowly. I'm not saying that within a day okay it will so I'm not saying that on Monday itself within a day okay the volatility it will collapse. No, I'm simply saying that from the Monday onwards the volatility will start to decrease. That will also say that the speculation okay it will be like it will decline, and the manipulation okay it will also decline. So if the manipulators have to manipulate, then now they will have to wait for something else. So in the probable movement of the S&P 500, okay, and guys, one more thing. This is the upward movement you are seeing. Now, question is that why the manipulators, okay, why they are taking the market up? So there must be some reason. Yes, there is a reason. There is a reason. Reason, okay, that I'm going to show you, okay, on the charts. That whenever we enter into the recession, okay, or a long-term correction, then generally we have seen that the entire this the market means this the stock market, okay, and this the S&P 500, Dow Jones, okay, and this the Nasdaq. So these things, okay, so these indices and the entire stock market, it is manipulated just before the crash or just before okay this the long-term correction, okay, or this a recession. So these the market manipulators, they willingly move the market heavily up against all technicals, and then suddenly all of a sudden okay something happens, and then we enter into the recession or in the correction. That I'm going to show you through the charts. And guys, again, I am a technical analyst. I analyze everything technically. I analyze the data that is out there, options data, okay, or this the okay, and whatever data we have to the government agencies, okay, like this the core PCE, okay, or this the CPI data, okay, or whatever the data, okay, that is coming out. So I analyze okay these data, the technical, the trend, and accordingly I give you the movement. Again, whenever the manipulation happens, manipulation simply discard the technicals. So again the manipulation happens. See, what is manipulation? Manipulation means when you simply defy the technicals, when you defy the data, when you defy the news, when there is nothing that can support a possible trend, and you are pushing the market in that the particular trend where there is absolutely no support from anywhere. That is what the manipulation, where everything is defied. So this is just for your knowledge, okay, that whatever I'm telling you, it is through the technicals. It is through the technicals. Now guys, I want to clear this thing that this S&P 500 technical analysis is not a financial advice of any kind, in any form or in any manner. This S&P 500 technical analysis is not an advice for you to place your orders in the stock market, any kind of orders, in any form or in any manner. This S&P 500 technical analysis is a technical analysis where I have analyzed the technical data, the options data, the market data, the stock market data, and the data that is published by the agencies. I am not a manipulator. I do not move the market. Whatever I'm telling you is through the technicals, is through the technical analysis only. So guys, whether you are making 1000% profits within a day or you are seeing 50% losses within a day, I am not responsible for your profits or losses, because I do not know how you are going to interpret my technical analysis. Some people, they are making heavy profits. Some people, they are seeing heavy losses, but they are following the same technical analysis. So I do not know how you are going to interpret my technical analysis. Now guys, let's talk about this, the first part of our agenda, that is the S&P 500 technical analysis on the weekly chart. So guys, before I begin, okay, let me tell you this thing, that this technical analysis, it will be a bit lengthy, and that is why I have made sections, okay, like this. So I have made these the sections in my technical analysis. So whichever part you want to watch, whichever section you want to watch, you can watch. Whichever section you want to skip, you can skip. Whichever section you want to rewatch, you can rewatch, right? However, I strongly recommend to watch this the entire technical analysis, because each and every section is related to the other section. So guys, this is the weekly chart. Let me write it down. This is the weekly chart. Okay, so this is the first point of our agenda, the S&P 500 technical analysis on the weekly chart. On this, the weekly chart, first we are going to interpret the candle itself. Okay, so when you look into the candle, it's a heavy bullish candle. Heavy bullish candle, right? Number one. Number two, the close is approximately equal to the high. Okay, and when we look into the Dow Jones, in the Dow Jones, okay, close, again the close is approximately equal to the high, and then it was moving up, and on these the smaller, these are time frames, okay, again means it is saturated, that is no doubt. See, again the entire market, it is trading on the saturated technicals, no doubt. Okay, and it is extremely unstable. Okay, but there were these the heavy bullish sentiments. Because of these the heavy bullish sentiments, because of this the heavily bullish candle, what we are going to see, we are going to see that on Monday, okay, it has created these the heavy chances that we are going to see the profit booking. What? The profit booking. Okay, so profit booking, what is the profit booking is, okay, that I'm going to describe, okay, in this the next section. So Monday we are going to see the profit booking. Okay, in simple words, we are going to see an upward movement. Okay, like either we are going to see a gap up open, or yes, most likely we are going to see a gap up open, or irrespective of open, we are going to see that it is going to move up. Okay, so initially it will be moving. So initially it will be moving up, and then it will be coming down heavily. So that is the profit booking. Other than that, okay, yep. So now let's talk about these the technicals. So when we talk about these the technicals, so the first comes this the Ichimoku cloud, and if you notice that the S&P 500 is trading below the Ichimoku cloud, this means that the S&P 500 is bearish through the Ichimoku cloud, right? Now comes the Bollinger Band. So when you look into the Bollinger Band, the S&P 500, it barely managed to close above the median of the Bollinger Band. Okay, and there is the upper band of the Bollinger Band. So through the Bollinger Band, now the S&P 500 on the weekly chart is bullish, right? Then comes the moving averages. If you see the moving averages, there is a clear fan out, bearish fan out, no doubt, bearish fan out. Other than that, the S&P 500, it has moved up and it closed inside the moving averages. So still it will be counted as the bearish. So through the moving averages, the S&P 500 is bearish on the weekly chart, right? See, the only case we will see, we will say that the S&P 500 means this the neutral. Okay, the S&P 500 is neutral to the moving averages. It will be there only and only if the S&P 500 closes above all of the moving averages. So the moving averages will be bearish, fan out, but the closing will be above the moving averages. In that case, only we will count it as neutral. But as of now, it is bearish. Okay, because it is still inside the moving averages, right? So these three things, it is bearish through the Ichimoku, it is bearish through the moving averages, and it is bullish through the barely bullish through the these the Bollinger Bands. Then comes these the other technicals. So when you look into, okay, these the other technicals, if you notice that the MACD and this the signal, okay, MACD failed. MACD failed to cross over the signal, means it is still bearish. It is still bearish. So MACD is still bear. This means that the S&P 500 is bearish through the MACD, right? Then comes the stochastic RSI. Stochastic RSI K channel is 35 or almost 36, and the D channel is 20. Both are below 50, still bearish sentiments. But because the K is more than the D, this means that the S&P 500, okay, it is directionally bullish because of this the stochastic RSI. Then comes the divergence. Divergence is moving up, but it's still normal. Then comes the volatility. Yep. So the volatility is high, almost like 95%, 96% of the all-time high level. So what we can see is that there are three bearish technicals, two bullish technicals, or barely bullish. Okay, three bearish technicals. This indicates that on this the broader scale, on this the weekly chart, on the broader scale, we are still in the bear trend. The trend of the S&P 500, the trend of the Dow Jones, the trend of the entire stock market and the Nasdaq is still bearish. Whatever you are seeing, this is just a normal reversal, okay, that is going to form a lower high and then it will come down. That's it. This is what it is indicating, nothing else. And that is why and see guys, this is why, okay, I always encourage everyone to look onto these the weekly charts, okay, or this the monthly chart. If not the monthly chart, then at least on this the weekly chart, because the weekly chart will tell you that what exactly is happening. So if you are a person, okay, who is heavily FOMOing, okay, or who is participating in the rat race, okay, because you are looking onto into this the 5 minute chart, 1 minute or 1 hour chart, in that case, okay, this thing is going to help you, the weekly chart, because when you look into the weekly chart now, there is no need to panic, there is no need to FOMO, right? Why? Because if you look into this the movement, so the movement is clearly saying that it was coming down, moved up, it came down, it again moved up, it came down, and now it is just moving up. And this is not indicating that it is going bullish. In order to go bullish, it has to work hard. In order to go bullish, it has to breach 4,200 levels. At least this the Ichimoku cloud, okay, 4,200. As of now, it is 3,900. No technicals are supporting this the bullish movement. Other than that, the upcoming news, okay, that I'm going to tell you, okay, and this the production output, okay, and the consumer sentiments. These things are technically, okay, these things are against anything that can go even into this the cloud that can. So I'm not saying, okay, that it can breach okay, or this that it can breach and close over. What I'm trying to say, there are the chances of seeing that it is hitting a cloud or it is going inside the cloud, even these chances are thin, right? So this means that as of now, no need to FOMO, no need to panic. If you think that you have missed your chances like last 2 or 3 days, okay, so you have missed like last 2 3 days, 4 days, 5 days, okay, not a problem. But you have captured a lot of profits here. You have captured, okay, this is the movement here. Soon everything is going to follow the technicals. When everything will, okay, when everything will follow the technicals, then everything will be, okay, it will become predictive through the technicals, okay, as we are doing for last many months. So guys, what we have seen is that the overall trend on this the weekly chart of the S&P 500, it is bearish, okay, the trend is still bearish, no change in the trend. However, there is a little bit like barely bullish, these the indicator, barely. This is the natural flow of the stock market. This is the natural flow of the index, S&P 500, Dow Jones or anything. This is how the stock market works. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community to get the daily analysis of the S&P 500, what is happening, okay, on the daily basis. So in that case, I have given the link to my YouTube community in the description of the video and also in the comment section. Now guys, let's move on to this is the second point of our agenda, that is the profit booking. Okay, what is this the profit booking, okay, that I'm talking about, profit booking technique, okay, and how it works. Okay guys, so now we are going to discuss the second point of our agenda, and the second point of our agenda is the profit booking and its impact on the S&P 500 or this the Dow Jones and the Nasdaq, or how it is seen in these indices or any other stock. Okay, so this is a technique basically. So what happens in this technique, because it was a Dow Jones, okay, that was driving the entire stock market, and the Dow Jones and this is the S&P 500 and the Nasdaq and all other these are global indices, and it was the Dow Jones, okay, that was heavily manipulated. So this is why, okay, for this the profit booking, I am going to use a reference of this the Dow Jones. So what happens is that if you have bought here, okay, and if you know, means if you are a market manipulator or if you are a market mover, if you know that this thing is going to move up to okay, it is to some X or Y level, okay, then you have bought here, okay, and then you are into this the trade, you are simply adding up, okay, some more money, because you are helping the entire stock market, in this particular case the Dow Jones, okay, or this the S&P 500. So you are adding up, you know, some of this the value, okay, here, so that you can move it up, right? Now what will happen, that there will come a point, a particular point, okay, when they have reached, means when you, okay, as a market mover or as a market manipulator have reached to this the level. So now what will happen, At this particular point of time, all of these are technicals, okay, they will be saturated. All of the technicals will be saturated or extremely saturated. Everything will be beyond the technicals, beyond the news, beyond the data. Now, because you have manipulated, you have moved up the market beyond everything. And the most important part is that now you are seeing that you are not going to get any other support to move up further, to move it up further. So what you are going to do, because you have bought from this particular level, from this particular point, you have moved it up quite high. Okay, now is the time to exit your positions. Exit your positions. And when I say exit, I mean dump whatever you have bought, either all at once, okay, or in like, okay, in these like 3 or 4 or 5 candles. Okay, as simple as that. But in this particular case, what has happened is that all of these are market movers, the market manipulators. Okay, so in my previous S&P 500 technical analysis, I have discussed the cartel. Okay, just like we have these other cartels. Similarly, we have a syndicate, we have a cartel in the stock market. Okay, so these people, they decide that where or so these people, they decide that what should happen to an index, what should happen to a stock, what should happen to this entire stock market, and they have the support. Okay, I hope you understand. So they have the support. What has happened is that because they have manipulated, okay, it a lot, and again, this is a cartel. Okay, so if there are other hedge funds or other institutions, they, okay, who have also participated in this the bull run, okay, in this the manipulated run, in that case, what will happen now? Everyone will think that the other institution or the other hedge fund is going to sell. The other will think, okay, that the other is going to sell. So what will happen? The same thing that has happened on Friday back in 2008. Okay, on Friday itself, I think that was Friday or Monday. Okay, there was the fire sale. Everything came down within a day because everyone was thinking that that the other party, okay, or there's the other this the hedge fund or this the institution or the family office, they are going to dump. Okay, so this has created a fear among themselves, right? So that has triggered this the very heavy selling. Now, what has happened is that generally, okay, or how we recognize this is the profit booking. So in the profit booking, what you can notice is that on Monday, so you can notice that on Monday we can see a gap up open. If there comes a gap up open on Monday, immediately upon gap up open, if it moves up, that is the first indication of the profit booking. Okay, means what has happened is that first they give a gap up open, then immediately upon open they try to move it up. Means they simply suppress the bearish sentiments, whatever is left bearish, they simply suppress. Okay, exactly what they did here, okay. So they simply suppress this the profit book these the bearish sentiments, and now they want everyone, almost everyone, okay, to think that now things are the things are bullish, everything is moving up, there is no means no bearish, nothing bearish, right? So generally, okay, what I have observed is that historical data, based on the historical data, it will take a minimum of 15 minutes. It will remain, okay, it will remain bullish at least for 15 minutes, okay, or it can remain bullish at least for 1 hour, okay, just to suppress more and more bearish sentiment, and just to make sure that everyone is, almost everyone, 99.99%, everyone is bullish. Okay, once they think, okay, now they are here, okay, that is enough. Now what they are going to do, now this is the point. Immediately all of a sudden you will see that something is happening. Something what? Something is happening, that it is coming down. This is a heavy bearish candle, right? Then there will be a bullish candle, 15 minutes. Then there will be another bullish candle, 1 2 3 3 candles approximately. Fourth candle will be like this. Okay, done. Then the next candle, okay, again it can come down, and then again, okay, 15 minutes it is holding, then again it is holding, or maybe like just moved up, and then again it came down. So this the natural flow. So it will look like a natural flow. Okay. However, percentage wise, okay, it will be heavy. It will be heavy. Now there is another indication of this, the profit booking. Okay, if we are using the hourly charts. So on the hourly chart, what will happen? You will see that okay, this was the first hour. Okay, it has moved up. the next hour, if the candle of the next hour, if that closes below the candle of the previous hour. See guys, this is only for the profit booking, okay, not in general. If the candle of the next hour, okay, a heavy bearish candle, if it engulfs or if it closes below the previous candle, okay, this is the upward candle, so that is another indication that we are going for the profit booking, means we are seeing the profit booking in the entire stock market. See guys, it is not that easy to identify whether we are going to see a heavy fall within a day or we are going to see this the sequential fall. Okay, so this is something that what they decide, okay, not us, and we do not know, okay, what they are planning. So now in this case, what will happen when it comes down? Okay, now let me tell you that in this case exactly. So I guess that, okay, this scenario is clear. Number one, we are going to see a gap up open. Immediately upon open, it will move up. Okay, that is the first indication of that we are going to see a profit booking. Number two, the second hourly candle, if it closes below this the first hourly candle, okay, that is the number two. Okay, this is the second indication. Now if you notice, through the Fibonacci, 33050 is the number. Okay, that is the 78.6% of the Fibonacci retracement level. This is the last retracement level. If the Dow is able to not breach, but if the Dow is able to close above the 78.6%, then no more retracement, then it will go bullish. Simple. Okay, and I've discussed the same in my Fibonacci retracement video. Okay, if you want to watch the what is Fibonacci, how it works, then you can watch that. Okay, that video. So 78.6% is at 33,050 and the Dow has closed at 32,861. Okay, means approximately this will be approximately how much? This will be approximately, if we move it up, then approximately 0.62% or 0.65%. Okay, approximately 0.65%. See guys, I'm not saying that the Dow will hit the 33,050 or 33,060 and immediately it will come down. No, okay, that is not necessary. We look into the Fibonacci basically based on the closing. Based on the closing, Fibonacci tells us whether there was a rejection or not. Just like what we have seen here, this particular candle, two consecutive rejection, and that was a confirmation we are going bearish, and this is it. Okay. So 78.6, so it can still breach 33,050. Okay, but again, because it is already trading at the saturated technicals, it will then get saturated, it will move up, and then it will become more unstable, heavily unstable. Okay, and in that case, because we are talking about the profit booking, okay, it will have to give up. Now this is the first part, Fibonacci. Second part, if you notice, historically, okay, this is the Dow Jones, okay, the confluence zone. If you notice, we have this the confluence zone. Okay, this is the zone, this is the confluence zone for the Dow Jones. Okay, Dow Jones is now trading in the confluence zone, and the upper part of the confluence zone is around 33,200. Okay, but again, see, that is not a possibility, but still let's keep it there. Okay, 33,200, 33,200, that is the upper part of this the confluence zone. Okay, so confluence zones, okay, they are like they have some significant these are numbers, lower band and the upper band. Okay, so because it is trading inside this the confluence zone, again it is stable, again it is unstable. This means if it has to, or if it wants to, then it will have to move up by more than like 1.1%. Okay, 1.1 or 1.2%, then only it will be able to breach the confluence zone. Okay, but generally I have never ever seen, even in the manipulated markets, I have never ever seen that even the manipulators, okay, they were able to breach the confluence zone. Okay, but again guys, it is not us, it is they, okay, who decide that what is going to happen and how it is going to happen. Okay, whatever I'm going to tell here, okay, this is all through the technicals. So this is the confluence zone. Now when the Dow, it sees a gap up open, and when it try to move up, then look into, okay, this particular candle, these particular candles, it should not be able to breach these candles. Secondly, it should be limited to, any upward movement should be limited to 33,250 approximately. So now what will happen once the Dow is there? This means it is trading at the extremely heavy technicals. It is trading with the extremely heavy and saturated and the extremely hot technicals. It is extremely unstable. Okay, so this is the point, okay, where we can say now we are done. And yes, most likely because this was a very heavy upward movement, so I can, or what I think is that they should go for this single heavy candle. Okay, and this heavy candle is should close below this the Ichimoku and below all of these the moving average. A single heavy candle, something like, okay, something like this heavy candle, something like, okay, this heavy candle, or this heavy candle. Okay, so I will discuss, okay, more of this part in the probable movement, but as of now, okay, I hope you understand. Okay, this is the profit booking. So profit booking, okay, this is how it works. So first they will simply suppress, they will simply suppress the bearish sentiments to like 99.99% levels, that they will, because they want everyone to think, okay, it is bullish, they want everyone to go bullish. And this is where, okay, they build that trap. This is the absolute, this is a beautiful trap, okay, that they build. And also this is the trap, and as well as this is an opportunity, as well as this is an opportunity for those who knows, who understand, okay, what it is, right? So again guys, because that it was the Dow Jones that was heavily manipulated, because it was the Dow Jones that was driving the entire stock market, the S&P 500 and the Nasdaq and the global stock market. This means that you need to look into Dow Jones on Monday, what is happening, when it is happening, okay, where it is getting unstable, and accordingly it will give you, okay, this kind of movement. And if these the cartel members, if these the lobby, if these the syndicate members, if they decide, okay, or if they want to keep it up, in that case the profit booking that is most likely to happen on Monday, okay, that may not happen on Monday, rather it can take Tuesday, okay, there will be some data. Sorry, no, not data, there will be FOMC, okay, so there will be this the FOMC minutes, okay. Tuesday FOMC minutes will be out, so they can book their profits on Tuesday, okay, not a problem. So this is how, okay, this is how it works. And if you are my YouTube community member, okay, then I will keep you posted. And if you are not my YouTube community member, and if you want to join my YouTube community, then I have given the link in the description of the video and also in the comment section. And guys, once again, if you have not subscribed to the channel, then please subscribe the channel. Now guys, after this the profit booking, okay, we are going to talk about this the third point of our agenda, and the third point of our agenda is the S&P 500 support and resistance levels. So now guys, we are at this our third point of our agenda, and that is the support and resistance level. So guys, before I give you these the support and resistance levels, I have this information to share with you, that if you want to join my YouTube community in order to get the daily analysis of the S&P 500, the pre-market update, the final update, the intermediate update. So if you want to get this the daily analysis of the S&P 500, then you can join my YouTube community channel. And in order to join my YouTube community, I have given the link in the description of the video and also in the comment section. So once you follow the link, then you will see that this is my YouTube channel page. On this the YouTube channel page, okay, I have this the join button, JOIN join button. So once you click on this the join button, then this pop-up will open. So once you see that there is this pop-up, then you will see that there are two options, only one midweek update and all midweek update. So what is this the midweek update? Midweek update means the daily analysis of the S&P 500. So when I say only one midweek update, this means that you will get the daily analysis of the S&P 500 only on Monday, every Monday, only Monday. And all midweek updates means that you will get the daily analysis of the S&P 500 from Monday to Friday, everything, pre-market, okay, intermediate updates, and then this the final update, everything you will get this, you will get through the all midweek updates. And if you notice that most of my members, like 98% of my members, they have joined this, they have opted, okay, for this the all midweek updates. More than 98 or now 99% of my members, they have opted for this the all midweek updates. So guys, once you have joined my YouTube community, then you need to come to this the channel and you need to click on the community tab. Once you click on the community tab, then you will find all of the updates. You will get all of the updates there. Or you can use the YouTube app, and whenever you want to join, you are welcome. So once again, I have given the link in the description of the video and also in the comment section. Now guys, let's talk about this the third point of our agenda, that is the support and the resistance levels. Support and the resistance levels, okay. So as you know that we are expecting a profit booking, okay, in the coming week, particularly on Monday. So as of now, we have another level at 3907. Let me mark that. Okay, this is the level 3907. Okay. So as of now, again, I'm not expecting, the S&P 500 to breach the 3937. 3937 or 3935, you can say 3937. Okay, this is what. So as of now, I'm not expecting, okay, before it comes down. However, I know that most of you want to know about, okay, these are possible, these are ranges. So above 3937 we have 3990. The chances are still thin, very very thin. Then we have 4035. Okay, 4035. Okay, so the chances will remain very thin, very very thin, 4035 or 3990. Okay, but like 3935, okay, at most to 3935. Okay, but if the profit booking it comes, then then I guess, okay, let me first check this. Okay, what will be like in terms of the percentage? 0.93%. So as of now, yes, if there comes a gap up open, immediately upon open, if there comes a movement, and if they are planning this the profit booking as we are anticipating, as per, okay, this the movement, in that case there are chances that it can hit the 3937. But before it can hit the 3937, okay, it will have to move up to breach the 3907. We have intermittent at 3, this the resistance at 3907. The question is that what is this the 3907? 3907 is the 50% Fibonacci retracement level. Now you need to understand that by the time the S&P 500 will be hitting 3907 or maybe like 3937, in that case at the same time the Dow Jones will be hitting the 78.6% of its Fibonacci retracement level. So there will be these so these two indices, they will hit their respective Fibonacci retracement level almost at the same time. Okay, so that is again a kind of confirmation that we can see this is a profit booking on Monday itself. Okay, other than that, guys, I will tell you that now technically it looks like that the S&P 500, okay, it is entering into the short-term bull trend. Okay, but that's a different thing. So other than that, if you notice, okay, this particular zone, okay, the confluence zone. So you will notice that last time, okay, this was the zone. Okay, this was the zone. Other than that, the zone was created again, okay, at 3935 level, okay, or on this level 3935. So this means that yes, indeed 3935 or 3937, okay, this, so it has acted as a confluence zone, and it is also our strong this the resistance, just like this the 3840. Okay, so I've told you that even if the S&P 500 breaches the 3840, it will come back again to respect the 3840 without giving or without holding here for a significant amount of time. Okay, it cannot move up or it cannot come down. So first it has to respect the 3840, then after respecting the 3840, and if it has to move up, then only it can move up, mean after 1-2 days or 2 or 3 days, okay, then only it can move up. So you can clearly see that it has respected the 3840. Similarly, we have 3937. Okay, almost the same thing, right? So this is there. Now comes this the support. So when we talk about these the support levels, so as of now we have the support at 3884. Okay, again 3884, it has hit the 3884. It came down yesterday, it was struggling in the 3884. Okay, again, and yes, 3884 again a very good support. Then comes the support at 3840 itself. 3840 again. Okay, earlier it was acting as a very strong resistance, now it is going to act as a very strong support. Okay, then comes the 3790. Again, a very good support. Very good support. Okay, if you notice that it was the 3790. Okay, that gave this the reversal. Right. Now, then comes the 3735. Okay, support, good support. 3710. 3675. Yes, 3675. Okay, it will act as a very good, very strong support. Then we have 3630. Okay, then below this the 3630. Okay, we have 3600. Then we have so yes, we also have 3585. 3585. Okay, then we have 3565, 3525, and then 3500. Now you might be wondering that why I'm telling you about the 3500 when the S&P 500, okay, it is moving at 3900. Let me calculate, okay, this thing. Okay, this was the close, right? And if you notice, there's the downward movement, 6.7%, 7% at 3630, right? Then it is 10% or 10.30%, right? Now you might be thinking that this is the 10%, okay, it is not possible, or it is impossible within a week. Okay, Then let me clear your doubt. Okay, the S&P 500, it came down by 10%. It came down by 10% within 3 days. Within 3 days, not within a week, but within 3 days. Okay, so do not think that the S&P 500 or these the indices, they do not have potential to come down by 10%. Okay, and generally when we talk about the profit booking, okay, and when they dump it all, in that case 6 to 7%, okay, that is normal. 6%, 6 to 7% is normal. Okay, if there comes one candle, okay, and if this candle when we measure from this level, okay, like anything that is below 4%, okay, it will simply trigger this the selling. So this is the short term bull trend that we are going to see. That will not happen. Okay, that so this is what I'm going to cover in the next part. Okay, next section. So anything below 4% means it has again closed below. Okay, all of these are moving averages. Even though there is a crossover in the moving average, but there will come now. There will come this a second crossover immediately back to back. Okay, so within like when they dump it all, in that case, what happened is that we have a theory that whenever the market manipulators, whenever they dump, okay, whenever they book their profits, then the stock market, entire stock market, the Dow Jones, okay, and particularly this the S&P 500 and the Nasdaq, then they come back to the levels from where these indices were manipulated. Okay, this means that yes, when we say like from this level, okay, it will be like 5% or more than 5%, and when it moves up from 3937, it will be like 6% or something. Yep, so again 6 to 7%, okay, that I mentioned. So this will be there, right? So that is the reason I'm giving you, this up to 3500. Okay, and yes, going beyond 3500 in the coming week, okay, that will not be possible for this S&P 500 or this entire stock market. Okay, until and unless we are going to enter into the recession from the next week. Okay, that is almost, chances are extremely thin. Okay, we can see that kind of heavy movement like 15%, 20% down within a week, only after the Feds, okay, they raise this the interest rate, or when the CPI data is out on November 10th. Okay, and yeah, thereafter only. Okay, but in the coming week again, let's keep it up to 3500, 10% down, that's it. Okay, not more than that. So what we are anticipating is that, okay, on this the bear side, okay, on this the bottom side, we have the 3500. Okay, then on this the upside, considering this the profit booking and everything, okay, we have 3937. Okay, that the 3937, it should be able to hold. Okay, and then it should give this the movement. Once it comes down, then it has potential to come down back to 3840. When and if it is survives, and if it survives, okay, above this the 3840 for like 1 to 2 days, 2 to 3 days, then only we can anticipate an upward movement. Okay, back to like to what level, back to this the zone of 3990. Okay, that is also the 61.8% of the fib. Okay, but as of now, again, the chances looks, okay, very very thin, extremely thin. Okay, so from 3935, 3937, yeah, 3937 to 3500. Okay, that should work well. Other than that, we have this is a 61.8%. Okay, so these are the things basically. These are the support and resistance level. Now, guys, let's talk about the fourth point of our agenda, and that fourth point is the dollar index, the bond yield, the volatility, and the earnings of the giants. Okay, what these the earnings of the giants are saying. Okay, and the possible outcome of this the data. Okay, this the FOMC. Okay, and this the Chicago PMI. Okay, that I'm going to discuss. Okay, in this the fourth part. So fourth part, okay, it depends on mostly on this the numbers. Okay, and the analysis of these the numbers. So guys, once again, if you're not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community, then I've given the link in the description of the video and also in the comment section. So you can use that link in order to join my YouTube community and get the daily analysis of the S&P 500. So guys, now let's discuss the fourth point of our agenda, and that is the dollar index, the bond yield, and the impact of like this the earnings. Okay, these things. Now guys, for those, okay, who are watching my S&P 500 technical analysis for the very first time, this is for them that what is the dollar index. So the dollar index is when we measure the strength of the dollar to the corresponding European currencies, particularly euro, okay, euro, the pound sterling, okay, the Swiss franc, and the Japanese currency, Japanese yen, and two other currencies. So when we compare the strength of the dollar, okay, to these six currencies, okay, that is what the dollar index. That is what is the dollar index, right? Now, I'm not going into this the more detail. Okay, I've discussed this a lot of time in my previous S&P 500 technical analysis. Okay. Now, so what has happened? So what happens is that whenever the dollar index, okay, it moves up, the stock market it comes down. This is the principle. Okay, this is generally this is how it works. Okay, and the same thing is with the bond yield. When the bond yield increases, the stock market comes down. Okay, now when the dollar index and the bond yield, okay, and the bond yield, when these two increases simultaneously, in that case the stock market has to come down. The Dow Jones has to come down, the S&P 500 has to come down, the Nasdaq, means these indices they have to come down. But what we have seen, that yesterday, okay, this the Dow Jones it was up. Yesterday this the Dow Jones it was up. However, yesterday the dollar index it was also up. Okay, and now I'm going to show you. Okay, this the bond yield. The bond yields were also up. Okay, so this is something, okay, that is not allowed to happen. The bond yield, the dollar index, and the stock market, they cannot be up simultaneously at the same time. If you notice that the dollar index indeed it is bullish. How it is bullish? If you notice that it failed to enter into the Ichimoku, right? It has survived on 1 and 2 days above the Ichimoku cloud. Even though there is a crossover in the moving averages, it looks like it is bearish. Now, if you look into the MACD, okay, there was a heavy divergence in the MACD that is further pushing the dollar index up. Then the stochastic RSI, it is weak bullish. Directionally, it is bullish, but it is weak bullish. So what we can see is that yes, still it is holding, it is surviving, okay. See, as long as it is above the Ichimoku cloud, it will remain bullish, okay, or it will be having the chances, or it will be having strong chances to remain bullish, right? Now, because it has survived for 2 days, this means what is most likely to happen? On Monday, we are anticipating a profit booking in the entire stock market, S&P 500, Dow Jones. This means that on Monday, all of these indices are expected to come down heavily, very heavily. This means that on Monday itself, the dollar index should be able to move up to close above all of these the moving averages, and once again, okay, it will regain its bullish movement, as simple as that. Okay, this is with this the dollar index. Now comes this the bond yield. This is the bond yield, and this is the 2-year bond yield. Okay, so the 2-year bond yield, it was 3.5% up, bullish, 3.5% up, and the 10-year bond yield, okay, that was 2.8% up. Okay, so that is what I'm saying. Yesterday the bond yield was up, and also at the same time, the dollar index was up. Okay, and also surprisingly at the same time the entire stock market was up. As you know that the bond yield, okay, it works inversely to the prices, because there is a very heavy demand of the bonds. Because there is a very heavy demand, okay, in this the bond market, okay, that is why the bond yield, okay, it is increasing. Bond yield is increasing, it is a signification, heavy demand in the market for this the bond. Okay, this is a significator that someone or many, okay, they are buying bonds because they know what is going to come. Okay, or possibly, I'm not saying that immediately, okay, the stock market is going to immediately the stock market, okay, it is going to come down, but yes, they know that what is going to come, okay, soon, very soon. That is why there is a very heavy demand of the bonds. See, we have the gold, and the bonds. So gold and the bonds, okay, these are the two things, okay, that these the institutions, okay, these the hedge funds, everyone, okay, not even these, but even the retail traders, okay, or means all of these are traders, they use the gold and the bonds, okay, to hedge, okay, means whenever they want to prepare, or whenever they want to prepare for this the worst case scenario, okay, the recession, or this the heavy fall, means whatever the worst case scenario, then they go and buy the gold and the bond. Okay, these are secure, these are very secure. Okay, because the bond is a promise from the government. Okay, gold, you know, okay, it is a universal promise. So now, this the heavy demand of the bond. Okay, it signifies that someone or many of these the big players, okay, they are participating in this the bond buying program. They are buying the bonds. Okay, That is the reason the bond yield is increasing. Bond yield, it was bullish. Technically, if you see that the bonds were able to close above all of the moving averages, absolute bullish, absolute bullish. Okay, it was coming down, but it was able to hold. Bonds are bullish. This means that earlier I was telling you that it is at 4.6, until and unless okay it moves up and hits 5% or just above 5%. We cannot say that the bond is that the bond yield it is going to come down. 5% or somewhere around the 5%, that will be the first point where we can say that yes, now it has achieved its target of 5%. It can hold for some time. Thereafter, once then after 5%, then it will move towards the 7%. So guys, we have discussed the dollar index. It is bullish. The bond yield, it is bullish, and there is heavy buying okay in the bonds. Okay, and the bond yield is moving up. These two factors, okay, they are indicating that the stock market should come down. Now let's talk about the earnings. Okay, earnings. Okay, this week, previous week, okay, you have seen it was Microsoft, it was Google, okay, Google, okay, class A and class C, these are the shares. Then it was Meta, then it was Apple, then it was Amazon. Okay, these are the giants. These are the giants, and also these are the tech companies. What? These are the tech companies. Okay, giants and the tech companies. Microsoft, bad earnings, bad guidance. Google, bad earnings, bad earnings. Okay, bad guidance. Meta, extremely okay, bad guidance and bad earnings. Okay, Apple, earnings okay on an average. Okay, but the iPhone sales, it has declined. That is the primary factor. That is the primary contributor to the revenue. Okay, so again we can say average or below average earnings, Apple. And other than that, the guidance, poor guidance. Amazon, poor guidance, poor earnings. Everything is poor. So everything is poor. Other than that, on Thursday, I guess it was Thursday, the GDP data. Okay, the GDP data and the consumer spending. GDP was plus 2.6%, 2.6% from the previous plus 2.4%. So it was 0.20% up. Okay, GDP. Consumer spending data, okay, it has increased. It has increased in a way that it is telling us that the consumers have to spend more on the same items that they were spending earlier, means inflation. Okay, that for they are spending like 10 to 20%, means like they are spending 5 to 10%, okay, or on some items 15 to 20% that they were spending last month or last quarter. Means consumer are spending not more, they are not spending more, but they have to spend more money on the same products that they were spending earlier. Means the inflation is moving up, inflation is increasing. GDP data, it was 2.6, it was plus 0.20% up. So what I'm trying to say is that these companies, okay, they have posted poor earnings and poor guidance, bad guidance. Okay, that the coming quarter, okay, and this the coming year, okay, that will be bad. So these the companies are telling us that the coming quarter okay, this the year it will be bad. Consumer are spending more on the same item as compared to just 1 month ago or 3 months ago. Okay, means they are forced, they are compelled to spend more. Okay, that is not an indication that they are willingly spending more. They are buying these the luxury watches, luxury cars. Okay, these the home. The yesterday the home sales, okay, it was 10% down, 10%. Wall Street has expected 4%, right? Only 4%, but it came out this the 10%, catastrophic, worst. Okay, these things are indicating that the consumers are forced. You means me and you means all of us. We are compelled. We are forced to pay more prices for the same items that we were okay means that are essential for us, right? This is so that is okay, that is what I'm talking about in terms of the consumer spending. Okay, then these are companies, the earnings of the companies, okay, most likely means most of the companies, okay, they have mentioned these the earnings were bad. Other than the banks, when we talk about the banks, okay, some banks have posted extremely bad earnings, extremely bad, like Citibank and others. Okay, some banks have posted some good earnings, but the banks who have posted good earnings, okay, when you look into their balance sheet, when you look into okay their these are comments, you will notice they have posted the good earnings based on this the increase in the interest rate. So what is the banks who have posted the good earnings, so what they have said, they have said that they were able to make profits mostly, or because of this, that they were able to post profits because the Federal Reserve has raised the interest rates. And because the Federal Reserve has raised the interest rate, so they have to raise the interest rates on the consumer loans, your credit card, your home loan, your personal loan, your any kind of XYZ loan. They have, so they have increased the interest rate on your loans, which means that you as an individual, okay, or a business owner, if you have taken any kind of loan, in that case you are paying more interest on that. And that more interest, okay, that more interest actually help these the banks to post good earnings. Okay, only and only this the interest, that is the reason. Otherwise, okay, you cannot say, miss, I have seen, okay, I have seen, okay, some of these the analysts, okay, who come on this the television, and who, okay, who publish their articles in this the news. They have said that these the banks have posted good earnings, means consumers are spending, they are, okay, they are opting for loans, economy is good. Okay, again, these members, these people, they are just trying to so they are simply trying to ask you, or they are simply asking you to speculate, okay, to speculate more and more, and do not look into the data. They are everything, sorry, not everything, but all of these, okay. I'm not saying that, again, the cartel, the syndicate, lobby, whatever, okay, you want to say, okay. So means they want the entire this the community, entire trading community, not just in the not just in this the US, not just in the United States, okay, but in the North America, Asian, okay, the Asian countries, okay, Oceania, European, everywhere, the entire world, okay. They want these the communities, these the trader communities who trade in the stock market, in the S&P 500, Dow Jones, and their respective, indices or the stocks. They want them to speculate bullish, so that these the cartel members, okay, who are using these the billions of dollars, hundreds of billions of dollars, they can make a lot of money. They can make a lot of money. So guys, now let's move on to this the daily chart of the S&P 500. So guys, if you notice, this is the daily chart of the S&P 500 for the week of October 31st, that is from October 31st Monday to 4th of November Friday. So what is going to happen until 4th of November Friday in the S&P 500, we are going to discuss here. Okay. So first, this the technical analysis, and this is the fifth point of our agenda. This is the daily chart. So guys, once again, daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. If you notice, then this is the last candle. It looks like it has engulfed the previous candle, but not exactly. Okay. However, the engulfing, it was there on the Nasdaq. Nasdaq. Okay, we have seen the engulfing. Okay, so we can accept that. Okay, we can accept that engulfing. Okay, not a problem. This is a bullish candle. Okay, kind of engulfing through the Nasdaq. Kind of engulfing. This indicates that there are bullish sentiments. Number one, there are bullish sentiments. And on Monday, okay, we can see a gap up open, okay, or irrespective of open, we can see a further upward movement. Okay, simple. Now, this is the absolute bullish candle. Now, technicals. Number one, Ichimoku. Because the S&P 500 failed to close inside or above the Ichimoku, and it has closed below the Ichimoku cloud, this means that the S&P 500 is bearish through the Ichimoku cloud. As simple as that, right? Now the next part is the moving averages. If you notice the two moving averages, we have clearly seen a crossover in two of the moving averages, but the third moving average, there is still no crossover. So we can wait for like 2 more days, I guess. 2 more days. So last week I told you that we can see this is the crossover in the moving averages if it doesn't come down, and indeed there was a crossover on Friday. Okay. So the crossover in the moving average, okay, it is there in two of the moving averages, but the third one, no crossover. Okay, so this is an early indication we are going to enter into the short-term bull trend. Okay, now technically we can say we are going to enter into the short-term bull trend. Okay, technically, I'm not speculating, I'm not assuming. Okay. Now, when this the third moving average crosses over, and whenever there comes a clear fan out, then I will say, okay, now technically we are in the short term bull trend. As simple as that. So it may take 2 to 3 days. If it remains bullish, it may take 2 to 3 days, but if it comes down heavily within a day, within 2 days, okay, then this crossover, okay, it may not happen. Once again, it may not happen. Okay, that is why I'm saying that it is an early indication that we are going to enter into the bull trend, but this is not a confirmation that we are going to enter into the bull trend, right? So within next 2 to 3 days, okay, we will see what, okay, we will see what the situation is there, okay, what the technicals are saying. And again, if you are my YouTube community member, okay, then I will tell you, okay, if we have entered into the short-term bull trend or not. And if we have entered into the short-term bull trend, then what will be the point, what will be the level, okay, from where we can go bullish, okay, means that point of entry, or that particular zone of this entry, right? And guys, yes, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community to get the daily analysis of the S&P 500, then I've given the link in the description of the video and also in the comment section, right? So as of now, technically, what we will say that technically S&P 500 is bullish through the moving average, right? Now comes the Bollinger Band. Because the closing was just below the upper band and this is the median, this means that the through Bollinger Band, the S&P 500 it is bullish. Now comes the most important part. This is what? This is the MACD. MACD bullish, clearly bullish, because MACD is more than the signal, right? Bullish, right? But what you are not seeing in the picture is the divergence. It is the divergence, right? What is MACD? What is MACD? Moving average convergence divergence. This is the MACD, moving average convergence divergence. Whether we are going to see a convergence, whether we are going to see a divergence. Whenever there comes a convergence, most likely there comes a crossover. Okay, if not, then we can see, okay, that the convergence often results, okay, this the very heavy, okay, opposite movement. Whenever there comes a heavy divergence, then it makes the entire market, okay, what we say, unstable, okay, saturated. Because see, if you notice that last time the divergence was there, okay, in this the bear trend, and because of this the divergence, okay, it moved up, and even the market manipulators, okay, they have used this opportunity, okay, this the divergence. And if you see in this particular case, this divergence is more than this divergence, right? This means, and this was the same thing that I was telling to my YouTube community members, okay, and that was the reason, okay, my YouTube community members, okay, on this particular day, okay, they have made money. So guys, through this the YouTube community, okay, the primary focus is on the safety. It is on the safety, okay. It is not like that we should participate in each and every trade. So the safety is the priority. Okay, first comes the safety, and then the profits are the byproduct of the safety, right? So safety means that we need to avoid seeing the losses, we need to avoid, okay, falling into the traps, and when we avoid falling into the traps, when we avoid seeing the losses, then the profit is the byproduct, as simple as that. So this is the MACD. So MACD is bullish, but it is highly unstable. Then comes the stochastic RSI. Stochastic RSI on this day, on Tuesday, okay, it was trading at 100. Stochastic RSI was 100. On Wednesday, it hit absolute 100. Okay, on Wednesday, it become extremely like what we say, extremely unstable. Okay, so there were some factors on Wednesday, okay, extremely unstable technical, so it came down, not just the S&P 500, okay, but the Dow Jones, okay, also came down. Okay, so there was this the downward movement, right? So we have this thing, that thing, okay, and again still K and D, K is less than D, but both are above 90. Okay, again bullish sentiments, but directionally that is bearish. Okay, so guys, in short, okay, what we have seen, Ichimoku is bearish, and directionally stochastic RSI, okay, it is bearish, right? Other than that, all of the technical, but again stochastic RSI, it is above 90, so we can consider that as bullish. So as of now, what we are going to say, we are going to say that the S&P 500, okay, that this the S&P 500 is bullish on the daily chart. It is bullish on the daily chart, but it is not heavily bullish, it is not absolute bullish, it is just bullish, it is barely bullish. Simple, it is barely bullish. Let's wait for I think 2 more days. Okay, so let's wait for 2 more days, one or two, not one but 2 more days. Once the picture will be clear, when there comes the confirm, okay, this thing, okay, then only we can say that it is that whether it is going to enter into the short-term bull trend. If yes, then what will be the point of entry? As simple as that. Okay, means point of entry means bullish, not bearish but bullish. Okay. So guys, this was the S&P 500 technical analysis on the daily chart. Okay, so we have seen that on the weekly chart it is bearish, on the daily chart it is bullish. Okay, so this means that it is going to form this the lower high, and then it will again resume its bear trend. So guys, now let's talk about now let's talk about this the sixth point of our agenda. And the sixth point of our agenda is the probable movement of the S&P 500 from October 31st, from Monday, and to November 4th, that is Friday. So guys, this is the sixth point of our agenda, probable movement of the S&P 500 in the coming week. Now guys, as I mentioned earlier, okay, in the weekly technical analysis also, and in this the other part, okay, and in these the other section, like this the dollar index, okay, and this the particularly in that the profit booking section, that it was the Dow. It was the Dow that was responsible for this the manipulation, for this the upward movement in the entire stock market, in the S&P 500, in the Nasdaq, and in the other global stock market. It was the Dow Jones. Okay, it was the Dow Jones that was heavily manipulated. This means that when we are when we are going to talk about this the probable movement of the S&P 500 in the coming week, we should also consider the Dow Jones. Now, first of all, what is clear? Number one, on Monday we are going to see a gap up open. On Monday we are going to see a gap up open. Number two, irrespective of open, we are going to see that the entire stock market is moving up. All of the indices like S&P 500, this is the Dow Jones, Nasdaq, everything is moving up. Number three, most likely on Monday we are going to see the profit booking. These three things, okay, these three things are clear. Now, on Monday, because we are going to see an upward movement, so in case of this the S&P 500, what will happen? We have our resistance level at 3937. Okay, 3935 or 3937. This is the resistance level. Okay, other than that, in the Dow Jones, okay, Dow is trading in this the zone of in its confluence zone, right? And we have 33,050, which is the 78.6% of the Fibonacci retracement. Then we have 3907, that is the 50% of the Fibonacci retracement. 50% of the Fibonacci retracement. Okay, we have two Fibonacci retracement. One is the Dow, one is in the S&P 500. Two. Okay. Other than that, the Dow is trading okay in its confluence zone. This means that the confluence zone will not let it move up or cross up or breach this the confluence. Okay, this particular zone. This zone is from what? This zone is from or is up to 33,200 or 250. Okay. This means that up to like 1% upward movement or 1.2% upward movement, okay, that is it. This is it. Okay, as per the confluence zone, okay, that is allowed. A maximum of that is allowed, right? Now, when the Dow sees a gap up open and immediately upon open, okay, when it moves up, in that case, its upward movement will be restricted to initially to 33,050, that is the 78.6% Fibonacci retracement level. Thereafter, anything or thereafter any other level up to 33,250, any other level, right? Now, we need to consider one more factor. At 9:45, now at 9:45 a.m. Eastern Time, US. Okay, Eastern Time, United States. 9:45 a.m. Chicago PMI data will be out. So last month it was 45.70. See, Chicago PMI, anything above 50, means the manufacturing sector, manufacturing sector, it is expanding. Above 50 means it is expanding, means it is a positive news. Below 50 means the manufacturing sector, it is contracting. There is less demand, less orders, demand and supply. Okay, and if you notice that the last month it was 45.70. Okay, a heavy decrease. So last month it was 52, that was above 50, so that was good. but now last month, okay, it was 45. This means that the manufacturing sector, okay, it is contracting. Manufacturing sector, it is contracting. This means the companies who are in the manufacturing sector, okay, their results are also contracting. Some companies are showing, okay, some good growth, but that does not mean, or that does not indicate, okay, there's the overall, okay, there's a sector. We have like hundreds of companies. If two or three companies are doing well, that does not mean that the entire sector is doing well. Sector means the sector, okay, it says what is happening in general. So the Chicago PMI data, it says that anything below 50 is negative. Okay, the manufacturing sector, it is contracting. Contracting means the demand is slowing down. The demand is slowing down. Okay, that is why it is contracting, right? Now, what the technicals are saying? Technicals are saying that the Chicago PMI, it is bearish, or it is absolute bearish. The Chicago PMI, it is absolute bearish. This means what we can expect. This was the level at 43.20. This was 43.20. Okay. This means that if the Chicago PMI data, if it comes like 43.20, 43.20, that was back in January 2020. Okay. If it comes at 43.20, okay, then we can expect that in the month of November, okay, it can try to hold. Okay, but if it comes below 43.20, then it will trigger some sentiment, some bad sentiments, poor sentiment, that because the Chicago PMI data, okay, it is less than 43.20, technically it has breached this the support. This means that it is creating absolute bearish conditions. Okay, means these are bearish sentiment, because in that case the sector, okay, the manufacturing sector, it is contracting at a very high speed, very high rate. It is contracting, right? This means that the market manipulators, okay, if they have to book their profits, then they have time until 9:45 a.m. 9:45 a.m. Eastern time, United States. Okay, so they have only 15 minutes. So what they can do is that initially they can give you a gap up open. Immediately upon gap up open, okay, they can try to move it up. And now they know that 9:45 p.m. the PMI data, okay, it will be out, and most likely it will be bad once again. Okay, so in that case, in up to 9:45 or just before 9:45, they will dump it all and they will book their profits. As simple as that. Okay, so this time, so this time is very, very critical. Now, what they can also do means, if they have some insider information, like they generally they have, okay, if they think that the Chicago PMI, okay, it will be more than 45.70, okay, or like above 50, in that case, they might not give up, they might not dump. In that case, they will get another reason. Okay, this time this will be supported by the data. In that case, they will get another reason to move the market up. Okay, but in this case, what will happen? They can move it up, the S&P 500 and the Dow Jones up, okay, by like 1 hour, maybe like 4 hours. Okay, and then they can dump, or like for the entire day, okay, they can move it up and then they can dump. Means if the profit booking doesn't happen on Monday, there is very, very heavy probability that the profit booking will happen. Okay, but if the profit booking doesn't happen on Monday, then Tuesday or Wednesday. Okay, because see, as of now, the technicals are extremely saturated, and from Monday onwards, there won't be, any good data or any good the earnings, okay, or from the giants. Means there won't be the strong base that can support the market manipulators to move up this entire stock market up. Okay, this means in this the uptrend, okay, upside. On Monday we have the Chicago PMI. On Tuesday we have the FOMC, okay, minutes. Okay, then back to back, then we have, this other data. On November 10th we have the CPI data. Means now from Monday onwards, the volatility, it will start to come down slowly. Then technicals, okay, technicals will be seen. Means the impact of the technicals, now it will be seen back. Okay, means the entire stock market, S&P 500, Dow Jones, these, okay, they will be more predictive, as they were not in like last 1 or 2 weeks, because of this the heavy volatility, speculation and manipulation. So it depends that what will be out there in terms of the PMI. This is the probable movement, okay, in this side, okay, upside. So see guys, there is one more thing, okay, that comes with this this the profit booking. When there comes a profit booking, and if after the profit booking, let's say it was down and then it has retraced back to above these the moving averages, in that case the profit booking, okay, it will give you an opportunity to go bullish in the short term bull trend, right? But again, we need to wait until the closing, okay. Now in the S&P 500, okay, or in this the Dow Jones. So first of all, okay, if you are my YouTube community member, then I will tell you whether they are going to dump at 945 or they are going to move it up, and what level, okay, we can use, or we can choose, okay, what level or zone, okay, where we can go bearish, because they are going to dump it all, right? Sorry guys, I forgot to tell you about this, the technical indicator that is saturated, okay, in this the Dow Jones. Okay, if you notice, the Dow Jones, it is trading, okay, on these saturated technicals for last 3 or 4 days. Last 2 days are extremely saturated technicals, extremely hot technicals. Okay, divergence is at the high, means there is a very heavy divergence. Wherever we see, okay, such kind of divergence, then there comes a reversal. This kind of divergence, it is not acceptable. That is why, okay, I've repeatedly mentioned this thing to my YouTube community members, that the Dow Jones, the S&P 500, entire stock market, it is trading at extremely hot. It is trading with extremely saturated technicals. Okay, they are trading with extremely hot technicals. Technicals are extremely hot. This means that any further upward movement, okay, it is not acceptable until and unless the technical cools down. Okay, so I will tell you that that at what particular time, when exactly, okay, we can expect, and then I will tell you, okay, that what levels, based on this the movement, whether they are going for a single, okay, this is a single, okay, heavy candle, or they are going for this the this is the sequential, okay, this is the dumping. Now guys, let's talk about this the second movement. So the second movement is, let's say there is some bad news. Okay, I don't know like what kind of bad news. Let's say that there is some bad news even before the open of the stock market on Monday. Okay, before the S&P 500 opens or before the Dow Jones open, there is some bad news. Okay, in like in terms of this the geopolitical, okay, or like in some other form, there is a bad news. Okay, very bad news. In that case, what will happen? In that case, we are going to see a gap down open. Or if the Asian and the European markets are down, in that case, we are going to see a gap down open. Now, gap down open. Okay, irrespective of open, number one, it should move up. I'm not saying that it should move up heavily. Okay, if they are planning to dump it all, in that case, this upward movement, it can be limited to like 0.1%, 0.2%. Okay, so if you are trapped, then you can use this particular point, okay, to exit your position. So you will get only 1 minute, hardly 1 or 2 minutes. Okay, if this happens, okay, it means if they are planning to dump it all, okay, from this level itself, okay, hardly 30 seconds, 1 minute or 2 minutes. Okay, or if they are planning to move it up, okay, so this will be kind of visible when we will look into this is the pre-market movement. Okay, like 9:30 a.m. okay, is when the S&P 500 or the entire stock market opens. So the movement from 9:15 to 9:15 a.m. to 9:30 a.m. Okay, we need to look into that the particular 15 minutes movement. Okay, and accordingly we can see, okay, what they are planning. Okay, whether they are going whether they are going to dump it immediately upon open, or they are in this the mood, okay, to move it up. See guys, we are talking about the second scenario, where there comes a bad news, some bad news, okay, for some reason, and the Asian markets are down and the European markets are down. Okay, so what will happen, that if they move it up, okay, some good upward movement, that will be good. Okay, because again it will give you an opportunity to go bearish. Okay, or if they dump it down, in that case it will simply cool down the technical. Just one candle, one very heavy red bull candle, it will simply cool down the technical. And also guys, there is a very heavy probability that we can see a single red heavy candle that will be having the potential to engulf the previous these 1, 2, 3, 4 candles. And this is the same thing that I've mentioned in my notes to my YouTube community members, that a one single heavy red candle will be having the potential to angle previous one or more than one candles, 2, 3 or 4 candles, right? So this will be this the movement. Now whenever it comes down, then you know the support. First it will get whenever it comes down, it will find the support. Okay, in these the moving averages, that is around 37 moving average will be around 3790 or 37 around 3775, okay, approximately. The levels that you need to look into, number one is the 3907. 3907 is the 50% of the Fibonacci retracement. 3935 or 3937, okay, this is where we are anticipating that the S&P 500 can move up to 3937, and then, okay, then it is expected to give up. Okay, in terms of the Dow Jones, we are talking about 33050, okay, that is the 78.6% of the Fibonacci retracement. Then we have 33250, that is the upper band of this the confluence zone. So you need to consider these, okay, you need to mark these numbers, okay, these levels, okay. So whenever you see that these levels, okay, both the S&P 500 and the Dow Jones, they have hit these are levels or the zones, okay, that is the time. And then not just the hit, but you also need to look into that whether it is holding or not, okay, whether the technicals are further saturated. So definitely the technicals will be extremely saturated. Simple, okay. But then you need to look into, okay, there's the picture that whether it is trying to hold or not, because if it is trying to hold, in that case it will give the profit booking after 1 hour or after 4 hours maybe. Means first the market manipulator, they will change your sentiments, okay, your emotions, then only, okay, they will give this kind of movement. Yeah. So guys, this is how, okay, we are expecting the entire stock market, okay, this the S&P 500 and the Dow Jones to behave in the next week, okay. And again, if there comes a candle that closes below all of the moving averages, then no short-term bull trend but the bear, but it will be the resumption of this the bear trend. As simple as that. The same is applicable to this the Dow Jones. One candle or two candles closing below this these the moving averages, that will be the resumption of this the bear trend. No, okay, no short-term bull trend, even though there is a crossover, but no short-term bull trend, right? So guys, once again, if you have not subscribed to the channel, then please subscribe the channel. And also guys, if you want to join my YouTube community in order to get the daily analysis of the S&P 500, then I've given the link in the description of the video and also in the comment section. So you can opt for the daily, this is the all midweek updates, and you can get the daily analysis of the S&P 500 from Monday to Friday. And guys, once again, if you have any question that you want to ask, okay, then you can ask your question through the comment section. And guys, one last thing, if you have liked this video, then hit like. So guys, this was the S&P 500 technical analysis for the week of October 31st. That is from October 31st Monday to November 4th Friday. And this weekly technical analysis has covered everything, that what is going to happen in the entire stock market and in the S&P 500 and in the Dow Jones and in the Nasdaq until November 4th, that is Friday.